The market melt-up rolls on, and my dad just roasted the Fed in Market Watch. By popular demand, Luke Lango is back. From quantum stocks exploding to Nvidia's big Intel bet, robotaxis, and Tesla's popcorn robot. Let's get into it. Welcome back to Navalier Market Buzz. Start with the Fed. Cuts and dot plots are driving the headlines. What's the real takeaway?
Well, as you know, I had an editorial piece in Market Watch where I said the Fed has its head in the sand. And the reason I said that is there's been job losses in the construction industry for 4 consecutive months, and the Fed is just ignoring the data. They know there's a labor department problem or labor problem. And I'm just very disappointed with the guidance on the dot plot. And so I'm frustrated. We need more rate cuts, not just this little one. And that's my comment.
Yeah, I would say that I'm disappointed in the guidance, but I'm confident that a lot more rate cuts are coming. That the tone is we're taking things on a meeting by meeting basis. Okay, if you are taking things on a meeting by meeting basis, I expect the data meeting by meeting to continue to be supportive of more rate cuts, mostly because of what Louis just said, that there is some real labor market weakness out there, and I don't see it stopping anytime soon. So if they are going meeting by meeting, the data will remain supportive meeting by meeting, they will cut meeting by meeting. So although the guidance I was disappointed by, I remain confident that they will cut rates enough times to keep the economy going, to keep the market going.
And looking ahead, 10 Fed governors hit the stage next week. Should we brace for fireworks?
Well, we do want them to give us guidance, and that's better than the dot plot. We actually have Neil Kashari, the Minneapolis Fed, did an essay acknowledging the Labor Department problems, but then basically said we may not need more rate cuts. So he's on the hawkish camp. He's very well respected. But, they'd like to talk in doublespeak and say one thing and then contradict themselves. So hopefully with 10 of them talking, we'll get a much clearer picture next week.
Yeah, I think we're going to see some divergences emerge in that speak. I know the dot plot was pretty consistent and it was tighter than I think a lot of people were expecting. But I think that when people take the podium and speak for themselves, truly for themselves, I think we're going to start to see a lot of Fed governors that really do want a more aggressive easing cycle. And I think that'll be supportive of stocks.
Now let's switch to quantum computing. IONQ scores an energy deal. Luke, how do you think investors should play this surge?
Yeah, I think the era of commercial quantum has arrived, entirely. This has jumped from a science lab project to real world applications. IONQ got that one. I think Rigetti won, which is another player in the space. They won a contract with the Air Force. So you're starting to see the government really get interested in this. Commercial quantum's arrived. These stocks are on fire. They had that big late 2024 surge. Then they kind of lollygagged for a couple months, but now they're starting to retake their highs or actually make new highs in terms of IONQ and a lot of the others. So I have the Quantum 4 is what I call them. IONQ, Rigetti, Quantum Computing, QBT, and D-Wave Systems, QBTS. Those are the 4 pure plays. I don't see any reason to give up on any of them right now. All of them are doing quite well. As we enter commercial quantum, I think all will continue to do well. Rising tide lifts all boats situation here. So I'm very bullish on quantum as we start to get commercial realization of the technology. Revenues show up, and that's when I think more money chases into these stocks.
Luke, I should add that D-Wave, I think, is the best performer year to date. What makes that stock so special?
D-Wave is, I would say, the longest. They've been in the game the longest of those 4. IONQ is the biggest with the most revenue establishment to date. But D-Wave has been doing quantum systems for a very, very long time, much longer than the other 3. And I think people really like their leadership. Their CEO is out on social media a lot. He's in the media a lot. He's talking a lot. He's spreading the word a lot. I think the retail crowd likes that. They're getting involved with that too. So I think the 2 things are they've been in the game the longest, so people really respect that time in the game. And then number 2 is their CEO is very much involved in spreading the word. And they are winning quite a few deals as well. So I think that's what's getting D-Wave going. It's also working off a smaller market cap than something like IONQ, so that helps too.
Now over to semis. Nvidia just dropped $5 billion into Intel. Which stock is the smarter buy?
Well, I think Nvidia is the best buy. What's happening is Nvidia and Intel are going to combine their platforms to make a new platform to speed up the data centers and even personal computers. But Intel just gapped up, and Nvidia is just a better buy, in my opinion.
Yeah, I would say Nvidia is a better buy over Intel. I think there's a political angle to this. Nvidia wants to sell chips to China. The White House is restricting that. The White House took a stake in Intel, and then weeks later, Nvidia basically says, "Hey, we got your back. We'll throw $5 billion in and help you out. We're scratching your back. Can you scratch ours now?" And so I do think that the angle there for Nvidia is more so, please let us sell a few more chips to China or ease those restrictions a little bit. And I think it'll be successful. And I think they'll be able to work out a very reasonable deal where they'll be able to sell more chips. More revenue shows up, and that's going to be a boost for the stock. So I think this is really good news for Nvidia. I think it's really good news for Taiwan Semiconductor, TSM. At first, I thought it wasn't, but then they came out with a report later in the day. Nvidia and Intel jointly said, we're going to make these chips in TSM foundries. So I think it's great news for TSMC. I think it's bad news for AMD. AMD is competing directly against Nvidia and Intel. That's been like the trio, the triumvirate in the space for a while, and now two of them are teamed up, essentially. So AMD is the odd man out. So I think it's bad news for AMD, but good news for Nvidia and good news for TSM.
Shifting to crypto, the SEC is tightening custody rules. Beyond Robinhood, Luke, who else is set to benefit?
Yeah, I think Robinhood is really set to benefit here. I just heard their CEO, Vlad Tenev, speak at the All-In Summit in Los Angeles. And I mean, he's got a vision for the future that is fantastic. And it's built around tokenizing equities, which is related to crypto. So I think they're fantastic. SoFi is doing really interesting stuff here. Coinbase is doing really interesting stuff here. So the kind of platform aggregators that are tied to crypto or allow people to invest in crypto, I think they're going to benefit tremendously as well. So there are multiple ways to play it, and then there's just the stablecoin story, which is really, really huge and really, really hot with all the bills moving through Capitol Hill, whether it's the Genius Act or the Clarity Act. Circle had their IPO. If how I view IPOs, it stands for it's probably overpriced. So you had that IPO, and then you had that super big surge, and then now you've had a big washout. The washout probably is an opportunity to get some exposure to stablecoins. They're the biggest stablecoin issuer with Circle. So those are some ways that I'm looking to play this. I'm going to call it a crypto boom. I think crypto boom is happening, and it's going to continue as DC supports the industry in a way that it never has before.
So back to equities. Dad, you always talk about quarter end window dressing. Is that why your stocks ripped after the Fed cut?
Yeah, the small caps went nuts. The Russell 2000 is at a new high now. I was just shocked at the melt up. Absolutely shocked. I was trying to buy stocks for new accounts that came in, and everything was gapping up. Why the end of the quarter is so important is there's this thing called institutional window dressing, where professional managers have to make their portfolios pretty. And we naturally benefit at the end of the quarter from this institutional accumulation.
Yeah, so that small cap rip that happened after the Fed, to me, is exceptionally bullish because the Russell 2000 finally got its record close, right? The first time since 2021. And so I ran the data going back to 1980, like what happens to the whole market after the Russell 2000 finally gets a record close for the first time in over a year. There are 11 precedents going back to 1980. 10 out of those 11 times, the market, S&P 500, was higher a year later with an average return of about 15%. So when small caps finally get their record close, it doesn't mean the rally's over. It means the party problems just getting started. So that's a bullish data point for that small cap.
And gold seems to be back in the spotlight. Dad, your Market Watch piece listed 8 gold stocks. What's with the obsession?
Yeah, the surge in gold has been going on for some time. It's basically due to a lack of confidence in central banks. Obviously, Japan can't raise rates much because they have such a big deficit. China has lower rates than Japan, and they are characterized by deflation for over 3 years. It's now on both the consumer and the wholesale level. And if anything, China might have to devalue its currency. You go look at Britain and France, they have all kinds of political things going on now. They got surging deficits. Go back to Brazil, the deficit's over 11% of GDP. So when you look around the world, we look pretty darn good. But there's still a lack of confidence in central banks, even in America. So everybody just buys gold. And of course, gold is being bought by a lot of central banks to shore up their credibility.
Yeah, I would say the gold thing is that's one thing that doesn't keep me up at night, but definitely keeps me a little worried. Gold and stocks being at all-time highs together is very, very rare. Again, this is something I ran an analysis on going, back 50 some years or whatever. It's essentially only happened 4 times before. And in 3 of those 4 times, what happened next was not good. So it happened in summer of 1972. Gold and stocks surged all-time highs. And they did that because the market was sniffing out potential inflation. And that was right before the first inflation wave of the 1970s when the CPI went from 3% to 12%. So that was right before the economy stalled for like 10 years and we had a lost economic decade, more or less. Gold and stocks also surged all-time highs together in the fall of 1980. And that was right when Volcker was coming in and jacked up rates like crazy to kill the last remnants of inflation, which was a good move. But as a result of that, the economy did fall into a recession and stocks crashed some 25% or so. And then it happened on the eve of the great financial crisis. Both stocks and gold soared to all-time highs. And we all know what happened right after that. That was in late 2007 and then obviously 2008, 2009. Not a great time for the economy or the market. So the precedents here are a little bit worrisome. I don't think history always repeats, but history does rhyme. So I do take some caution in the fact that gold and stocks are rallying together. Of course, there are a multitude of arguments for why this time is different, may be different, but those are also the famous last words in financial markets. This time is different, right? So I try to keep some caution up right now because of that stock and gold correlation at record highs that historically does not end well for stocks.
So I have to ask, Luke, if it comes down to it, are you team gold stocks or team crypto?
I would say I'm team, it depends on the situation. If things really get bad, which I don't think they will, then I'm team gold stocks. If things remain as they are on track, the train remains on the track, then I'm team crypto. In my opinion, there's much more alpha to be had in the crypto markets, especially if you look down the risk spectrum into altcoins. That Bitcoin has had this massive run, but altcoins have been lagging significantly in this cycle. That is starting to change. A lot of platforms out there, CoinMarketCap is one of them, tracks how well altcoins are doing relative to Bitcoin. According to their measures, we are finally entering what's called altcoin season, where altcoins are finally meaningfully outperforming on a consistent basis relative to Bitcoin. That is a pretty exciting time. That's when you can get, 100%, 500%, 800% rallies in small cryptos in a matter of a couple months. So if things remain on the course that they are, I'm team crypto. If things really go off the rails, which I don't think they will, then I'd be team gold.
Luke, Trump's filed, I think, for 5 ETFs, all crypto related. And even though Bitcoin dominates it, it looks like all the other cryptos, Ethereum and everything else are going to get an allocation. So there are any ones you expect to benefit as these altcoins get institutionalized?
Yes, I would say there's the ETF stuff, and then there's the crypto treasuries, right? A lot of these companies now are becoming crypto treasuries like Strategy. Formerly MicroStrategy, they changed their name to Strategy. Their whole thing was they're just going to use all their money, then go to the debt markets even, get more money to buy Bitcoin. They became a treasury for Bitcoin, more or less. Bitminer, ticker BNR, is doing that for Ethereum. There's a handful of others that are doing it for Chainlink and Solana and a bunch of I would call them the top 20. So I would say that plus the ETF stuff means that dollars are going to flow from, if you kind of go to coinmarketcap.com and look at that top 20, money is going to flow from the top 2, Bitcoin, Ethereum, down to XRP, BNB, Solana, Dogecoin, Cardano, Tron, Hyperliquid. Money's going to flow into those. In terms of money flowing all the way down to the 76th biggest coin or the 176th biggest coin, I don't think that's going to happen quite yet, but I think a lot of institutional money will flow from those top 2 down into the rest of the top, 10 to 15.
Now over to the Robotaxi wars. My dad keeps saying that Uber takes the crown with its software and alliances. Luke, are you buying that?
Absolutely. I 100% am buying that. There was news this week that I guess you could say ruffled some feathers in that bull thesis, with Lyft announcing a partnership with Waymo to expand into Nashville, Tennessee, which is odd because Waymo and Uber have been buddy-buddy. And Waymo's never done anything with Lyft, and now all of a sudden they're partnering with Lyft to launch a new market. So that ruffled some feathers, but I think what's happened, what I told my subscribers is, hey, they went into this market, they got married. Waymo and Uber. And then Waymo tried to open up the relationship by going at it alone in a few markets. And that made Uber nervous. So then Uber opened up their side of the relationship and started partnering with other self-driving companies. Neuro, Lucid, Baidu, Motional, etc. They partnered with a whole bunch of them. And that made Waymo nervous. So now they're going and partnering with other rideshare platforms like Lyft. They're just kind of experimenting. What they're going to find for their experimentations, what Uber is going to find is that Waymo has the best technology. I don't really like putting people in our Uber network in these cars that aren't as safe, as effective, as good as Waymo. And what Waymo is going to find is that I don't like making these super expensive cars that are going to get very significantly lower utilization on a Lyft network because the network is so much smaller. They're going to find out when they launch in Tennessee, those cars are going to have way lower utilization rates than their cars in the Uber network in LA or San Francisco or Phoenix. So they're going to be like, maybe we should go back to Uber. And then Uber's gonna be like, maybe we should go back to Waymo. And so I think, with time, 6 to 12 months, boom, they're remarried and they take over the world. So I'm with Louis, team Uber. I think Uber is probably the most well-rounded way to play the Robotaxi revolution.
I have a quick question about Waymo because we actually got a comment in one of our last videos that Waymo can't actually drive on the freeways.
Yeah, Waymo is not. So I think Waymo just got expansion in Phoenix to drive on freeways. But yeah, right now it does not drive on freeways in Phoenix. In the San Jose, San Francisco area, they just got expansion to pick up at airports and drop off at airports. That's a big one. They're doing that here in Phoenix at Sky Harbor International Airport. So it's kind of just piece by piece that they're expanding. They are a huge safety first organization. If you look at their track record, it's very, very strong. There was, we got to be honest here, there was a fatal accident involving a Waymo, I believe about a week ago in Phoenix, in Tempe. Waymo was not at fault. It was, Waymo was trying to turn right and there was a pedestrian and it stopped to turn right, and then a motorcyclist behind it hit the car, and then the car behind the motorcyclist, I think, kind of sandwiched the motorcyclist. So there was a fatal accident. That does set it back a little bit, but because the Waymo is not at fault, I don't think it sets it back much. So I think they're a big safety first organization. That's why they roll things out slowly. That's why they make sure that when they do something, they do it right. They don't rush into things. And so that's why they're not on a lot of freeways yet, but I do expect them within the next 6 months to be in the major markets they operate in. They will be on the freeways.
I should add that there was also a fatal accident in China, and HSI, the lighter company, they basically said they're not sure autonomous driving is eventually going to happen, but I think they said that to kind of cover their butt because of the fatality in China. It's funny, we had a subscriber email me, and he lives in Austin. He says he's getting blinded by the lasers on the Waymo. And I tried to assure him that even if he gets blinded, the LiDAR will see him and stop. So I don't think he liked my comment.
You'll all right. I think the thing about Hesai is they're starting to win a bunch of contracts with U.S. companies. I think it was a Mercedes or somebody that they want to contract with. Yeah, they're starting to expand into U.S. markets, which is really... They were already working with some of the autonomous vehicle companies, but they weren't working with any of the major auto OEMs. And so now they are. So that's a massive expansion of Hesai's market, and the stock's been responding very well.
Oh, yeah. And I recommend it's a monopoly. I love monopolies.
So let's talk about Tesla. The Optimus robot was actually serving popcorn. Luke, is this the future of robotics or just some hype?
Yeah, I think it's the future of robotics. I think humanoid robots are the next value unlock of consumer technology. So you have the Optimus robot serving popcorn at the Tesla diner in Los Angeles. Then you had I think it was called the World Humanoid Robotic Games in China, where it was like the Olympics of robots, of humanoid robots, and they were running races and playing soccer and doing all these physical contests. And yes, it was not great. It did not look like Usain Bolt running the 100 meters or Lionel Messi kicking a football, but it looked good enough. It looked impressive. It was an impressive display of the physical capabilities of humanoid robots in 2025, considering they were not even close to this 2 or 3 years ago. So if you kind of extrapolate out and see where we're going in the next 3 to 5 years, I think that the next 3 to 5 years will be defined by humanoid robots, production of them ramping dramatically, and they start to make their way into retail industrial operations. So you'll see them in factories, you'll see them in retail stores like the Tesla diner, you're probably seeing like Walmarts and Amazons and things like, not Amazons, but Amazon fulfillment centers and things like that. I think that's when you start to see them. And then probably 2030 plus is when you start to see them in households. So I do believe that the humanoid robotics revolution has arrived. I think we are at the first inning of what will be a very exciting ball game over the next 5 to 10 years. And I think that ball game is going to drive Tesla stock significantly higher. That Tesla stock, it has a history of going nowhere for 3 to 4 years and then going vertical for a year or two, going nowhere for 3 to 4 years and going vertical for a year or two. First period from like 2010 to 2013 went nowhere for 3 years because nobody thought Tesla could be profitable. Then in 2013, they had their first profitable quarter and the stock went from a split adjusted like $2 to like $12 in about a year and a half, 6x in about a year and a half. Then it went nowhere from like 2014 to 2019 because, okay, you're profitable, but you can't scale. You can't, no one's going to, how many people are going to buy a $100,000 Model S? You need a more affordable car. And nobody thought they could do that. And Elon's like, I can do that with the Model 3. Nobody believed him. Then he did it with the Model 3 in 2019. And the stock in 2019 just went straight vertical from 2019 to late 2021. It's been stuck in a sideways holding pattern since 2021. Now we're starting to break out of that sideways holding pattern. The stock has had a lot of upward momentum in the last few months. And I think it's the beginning of a breakout phase throughout the rest of the year, 2026 into 2027, driven by autonomy, just talk about the robotaxis, and a humanoid robots with Optimus.
I do have a question, though, for Luke. When is the Model 2 coming out? Because that's supposed to be Tesla's big winner. It's supposed to be cheaper because there's hardly any welds in the car because they have that big press. Do you have any idea when that's coming?
I do not, and it's because the company is not really giving much information on that. Elon is doing everything in his power to shift the narrative on conference calls and in his communication on X and everything from this cheaper, more mass model electric vehicle to Optimus is coming, Robotaxi is expanding. He's just really trying to hammer on those two pillars. And so that's all he talks about. When people ask him about the Model 2, it's coming, but the deadline keeps getting rolled a little bit. So I don't really know when that's going to come into play. But I think the market's kind of telling you right now that that's, investors don't particularly care too much about that. He keeps pushing the deadline there, but they're more excited about Robotaxi expanding. They're more excited about Optimus serving popcorn and the potential to scale production there. So I think the market's kind of saying, you know what, we're okay with the Model 2. Whenever it comes, and we're fine with that. But let's really focus on the Robotaxi piece of this, and let's focus on the Optimus piece of this because they believe that's the next value unlock. And I agree with that thesis for the most part. They can't postpone it indefinitely, but I think they can for a while.
Well, the BYD Seagull's all over Mexico and Latin America, and it's not here in America. So
right,
it has a window to compete with them if he can get the Model 2 out there. But anyway, we'll see what happens.
Now, looking at the macro picture, home sales, durable goods, and PCE data drop next week. What should investors brace for?
Home sales will probably be poor, but hopefully we'll get an uptick, but I'm expecting a poor report. Durable goods should be decent. We've had some signs of life on the manufacturing side. Hopefully all the data centers they're building shows up, because they get to have accelerated depreciation. We do know the PC components, but owner's equivalent rent was up 0.38% last month. That was a lot. So I don't expect the PC data to be that encouraging.
And finally, earnings season is heating up. Here's the lineup. Let's start out with Micron. Memory chips never forget. Will Micron deliver another big surprise?
Absolutely. Micron sales are forecasted to rise 43.6%. Earnings are forecasted to rise a whopping 142%. There were positive analyst revisions. I expect Micron to post another nice surprise. They are benefiting from very fast memory chips in the data center boom.
Jabil, a circuit board company. Do they have another trick up its sleeve?
Yeah, their sales are forecast to go up 9.9%. Earnings are forecasted to rise 27.7%. There's positive analyst revisions. So I expect Jabil to post another nice surprise.
AutoZone. Will this auto parts giant finally shift gears or stall out again?
Well, this is an interesting company because it buys a tremendous amount of stock back, but it has unfortunately missed analyst estimates in the past 4 quarters. Their sales are forecasted to rise 0.8%. Earnings are forecasted to rise 6.2%, but there has been some minor analyst trims. So I really would just like to see AutoZone finally surprise, but my expectations at this moment are low.
You've mentioned KB Homes before, but what are you expecting for them this week?
Well, sales are forecasted to decline 9.9%. Earnings are forecasted to decline 26.8%. There are significant analyst cuts in the past 3 months. So their guidance is going to be crucial. Now, we have mortgage rates coming down, but not enough to stimulate the housing market. You have to discount homes to sell them. And, I just need positive guidance from a home builder. We didn't get it from Lennar in the previous week. So let's hope we get it from KB Homes, which is, of course, Kaufman and Broad.
Now, will CarMax benefit from higher used car prices?
I believe so. Their sales are only forecasted to go up 0.2%, but earnings are forecast to rise 24.2%. There's been some minor analyst trims, but I do expect them to post a nice surprise due to the higher used car prices, according to CPI.
Now, I know we all love Costco, so hopefully you have some good news.
Yeah, their sales are forecasted to rise 8.1%. Earnings are forecasted to rise 12.7%. They have very steady analyst estimates. I expect a nice surprise. They post small surprises, but their guidance and same-store sales growth will be key. Costco is a luxury retailer, and it's very, very important to fight all the inflationary trends out there. So I expect it to do very well.
Great. Well, thank you so much, Luke, for being here this week. And thank you so much for you both for answering all my questions. Make sure to give this video a like and subscribe if you haven't already. And also leave any questions you have in the comments below. But until then, we will see you all next week for a new video.